So I'm sitting here and it's a red day and I'm running out of time to recoup my losses and get myself back into the green. So I think the best thing to do at this point is to walk away, to call it, and to do the red day recap. Now, last week on Thursday was also a red day. So now 2 Thursdays in a row, I'm doing red day recaps. I don't know what the deal is with that, but we'll get into it and start breaking down the stocks I traded. I actually traded a total of 7 stocks today, and I'm green on 4 out of the 7, which is interesting because my accuracy today was pretty good. I took about 20 individual trades on all these stocks, and I only had about 5 losers, and yet I'm red. And so the problem today was not accuracy, it was profit to loss ratio. And the issue, I had a couple of losses. I had 2 losses that were a little bit bigger, and I'll go over those trades. But the real issue was that I didn't have any big winners. So usually on a good day, when I have 75, 80% accuracy, I'll have a couple of nice big winners, and those can soften the blow from the inevitable losses. But today, I didn't get any big winners, so my average winners are smaller. I had a couple of losses that are kind of regular size, but a little on the bigger side, I guess. And so the average losers are bigger, and even though I've got 75, 80% accuracy, I'm in the red. Now, red days happen, and I would consider today to be a successful red day based on the following criteria. Given that, for me, out of every 10 green days, I'll have 2 red days. Out of every 10 trading days, I'll have 2 red days. So that means 80% of the time I'm green on the day, and about 20% of the time I'm red. So I figure that I'm going to have generally, 3 to 4 red days each month, or 1 red day a week. Now, unfortunately, what often happens is that the red days get clustered together during kind of a slump when the market's cold, and then I'll have a nice long stretch of green days. So, I had a red day last Thursday, having another one here. So I only got, 5 trading days in a row before catching another red day, which I guess I wish that it was a little hotter. But I think one of the issues we're dealing with right now is that we've got this GameStop distraction going on. It's sort of distracting from the way I would typically trade, but giving some opportunities. We've got some penny stocks that are in focus, and there's just sort of a lot going on. I think attention is a bit dispersed. But nonetheless, today's a successful red day because I followed my rules. I walked away at the right time. I'm not overstaying my welcome. I didn't spiral. I didn't hit my max loss. And so if it's a small red day, that to me is a success, because a small red day is easy to recover from. And at a certain point, I know for all of us who are traders, we often feel like I need to close each day green, because if I spent all day sitting here and I have less money than I had at the beginning of the day, I feel like a loser. I feel like an idiot. What am I doing? But big picture, the big picture here is that if you have, 30, 40 days of trading and 4, 5, 6 of them are red, but at the end of those 30, 40 days, you're net green, you're doing something right. So it's really important on those individual red days that you don't get tunnel vision and get so fixated on trying to make back a couple $100 that you end up throwing good money after bad. Because that's exactly what I've done. In fact, I had a day not that long ago where I was on a really long consecutive green streak and I went red. I think it was like $100. And I was like, I'm sure by the end of the day, I can find something to get myself back into the green. And then next thing you know, I'm down 200, 500, 800, 1,000. And then I'm like, oh, I don't want to leave yet. Now I'm down 1,000. Let's see if I can make back a little. And next thing you know, the loss is getting bigger and bigger. And it's like, wow, why did I even care about being down $100? That was so silly. All right. Well, anyways, this is part of trading. We know that it's a mental game. And one of the challenges that we had today was, of course, GameStop has been in focus. And I did my episode earlier today talking about how the options chain is showing the open interest on the June 21st expiration $20 call strike price as having declined in open interest, which indicates that Roaring Kitty has sold some of his position. But what we don't know is if he has rolled it out into a different strike price with a different expiration date, either sooner or later. There are weekly options that expire on GameStop tomorrow. And then, of course, there's next week, week after, et cetera, et cetera. So right now, we're just kind of, at least I, and probably along with many others, are waiting for a YOLO update because it's been a few days since we got one. The last update was on Monday. So here we are on Thursday. We haven't seen anything. I think we can assume that there's going to be a change in position the next time we see something. Will there be a new position that he's added? I mean, I'm hoping so, right? I'm optimistic, eternally optimistic, but I'm hoping that we see a new position that he's added. So he's sold some of these calls and then added something else. What I would like to see is that he's either exercised and turned some into stock, or that but I don't know that he has, because we saw the actual sell orders of these options going through in the volume, or that he's added a strike price that's a little further out of the money, either an upcoming expiration, sooner is, I guess, better, because it indicates that he's got still some real confidence that something is going to happen between now and the end of next week. So I thought something was going to happen today. The shareholder meeting, right? We were all getting excited for the shareholder meeting. 10 a.m. Central Time, 11 a.m. Eastern, and we all load the website and it crashes. All the traders trying to tune in, they weren't prepared. Now, for a company that's supposed to be kind of focusing on a digital transformation and capitalizing on, digital gaming and everything else that downloads, I'm surprised that they didn't have sort of the ability to think there's probably going to be a lot of people tuning in to this conference call, given everything that's going on. Like, to me, they had to know that. There were 600,000 people that tuned into Roaring Kitty's broadcast. So, there's going to be so many people tuning into this conference call. They were not prepared. It crashes. And rather than just host it on Twitter or on YouTube, they're just postponing it. So all of a sudden, this opportunity, hopefully, to get some nice trades on GameStop, our hopes were kind of shattered as they decide to postpone the call. So I did take one trade on GameStop. I was watching GameStop, and I closed that window. But anyways, it's okay. So I was watching GameStop this morning, and I noticed that there was a 100,000 share seller at $27.30. So $27.30. So I put an order there for that breakout, and we ended up breaking that level of $27.30. That seller got bought up, and we squeezed up to $28. That was my one trade right there. Now, I didn't make a lot of money on it. I made $377.83. I was hoping to be able to hold a little bit longer, so I got in, I let it ride, and then I set a stop on it, and I got stopped out when it came back down with some profit. So that was my one trade on GameStop. By the way, here's my P&L for today. So down $685.72. Like I said, a successful red day. Disappointing that I'm red, but tolerable. I'll go over these two trades here on Zap and LGVN, because those are my bigger losses. And, well, we'll talk about all of them. But anyway, so first trade of the day this morning, we'll go back to 7 a.m. I sit down at 7 a.m., looking at GameStop, kind of catching up with what happened overnight. And then I decided to do a sort of emergency episode about the fact that I saw this open interest had decreased, indicating that some of those contracts had sold. And, was sitting here waiting for something to hit the scanners. So this morning, like any other morning, I'm looking at my top gapper scanner. I'm watching stocks hitting the high day Momo scanner, as this one's hitting right now, but of course with bigger spreads. And I'm just waiting for something that looks good and has news. The first stock that ends up hitting is DRCT. And this is such an insult, because I got in it right here at, it was 575. It goes up to 6, and then it dumps back down. And I'm lucky that I made $100 on it. I could have easily lost money on that, but I basically stopped out just above my break-even price. It drops down, but then at the open, it rallies back up. So I don't know what the deal was with that, but that was my first trade of the day. So that did not instill confidence. My second trade was BRTX. BRTX is currently up 27%, but this morning I was putting in a nice move right here. So I'll show you the trade that I took on it, and I'm actually going to zoom in on the 10-second chart, because this was kind of a fast trade. So I noticed on BRTX that we had a lot of sellers stacked at $2. All right, so that was right up here. We had a lot of sellers at 2, and I thought, I don't know if we're going to be able to break 2. And I also noticed that it felt like maybe we had some kind of ascending resistance here between the high of this candle, sort of the high of this candle. So we come back up here. I don't buy down here, but it pops right up here, and this is what it does. Let's zoom into this spot. So right here, it pops up to $2. It hits a high of 201, as you can see on this candle right here, and then it drops down. It comes back over 2 right here, and it holds 2, and there's a big buyer at 2. And I said, boom, I'm getting in this. I bought 15,000 shares, which is a little bit of a big position. So you could say that I broke this rule here of keeping 5,000 share max size before I crossed $1,000 of profit, because I was only up 99 on DRCT. But this is a cheaper stock. It was also super thickly traded, so there were big buyers. I didn't have any liquidity issue, so I was able to punch that order. I didn't get any slippage. I got filled at 201. It pops up to 208 right here, and I took profit right here at 210. So that was about $1,500 of profit. And then I got back in right here thinking it was going to curl, and I got stopped out right here and gave back a couple hundred. So up $948 on 2 trades on BRTX, but I churned some shares on it because I was buying and selling bigger positions. So my commissions on that one alone are going to be close to $200. That's a lot. So, that's unfortunate. But anyways, that's sort of the problem with these stocks. So then at the open, it ends up squeezing higher to 217 to 220, up to 230, but then it drops back down. So got a couple trades on it, and that was about it. The next stock that I traded was BNED. And BNED is currently up 40% right now. And I looked at this and I thought, this daily chart's not bad because you've got this small red candle down here, a little doji at the bottom, and it's kind of a reversal. Recent reverse split. But remember, this had a lot of volume back here at the end of May. And it made this move from here all the way up here. And then now it's reversed. So to be honest, a little skeptical on it. It hit my scanners at about $7.50. That was right in here. And I was like, I don't know. I'm not sure. Well, sure enough, it ends up ripping. I got in and participated in the top side of that move, but gave back the little bit I made on it. So down $68, whatever, doesn't matter. Next one, LGVN. All right, this is the worst trade of the day. So LGVN, this one is really annoying. It halts up right here. And I'll do the 10-second chart on this one as well. So it halts up at $3 and it resumes. Let's go back here. So this was right here. So it resumes. And I was like, okay, here we go. It resumes and I punched the buy order and I got filled somewhere around here. No, I got filled at about 301. So I got filled right about up here and I was looking for it to go into another halt. It dumps down. I held, but I eventually stopped out on this candle here as we broke the low of this candle, which was 285. I took 10,000 shares. At that point, I was up 1,000 on the day. But anyways, I ended up losing 2,500 on that trade, right? So actually, no, I'm sorry. I didn't stop out there. I stopped out at 73. I stopped out right down here. Basically, honestly, as it turns out, very close to the low, but whatever. That was my max pain on that trade. I stopped out. Then we saw this jackknife move here, and then a little bit later, it pops up again. But that was my biggest loss of the day, and that was a bummer to lose 2,500 in one trade. That gave me a swing there from being up 1,000 to down 1,500. I then had my trade on ZAPP, Z-A-P-P, and this one is annoying because I sort of had a similar thing happen where I jumped into it after the halt at $2 and what was it? Can't remember. Let me look at the chart. This was, let's see, 10:15. It was right here. So I jumped in it right here. It then drops down. I thought it was going to halt down, and I was like, oh no, I'm going to get stuck in a halt down. I stopped out, and then it bounces and halts up. Yeah, that's annoying. Then it drops here, comes down, comes back up. I got back in on this resumption right here at 260, and I took my profit as it resumed right up here at 280. So I was actually down about 3,000 and rallied back to being, down 685 right now. So let's see, talked about GameStop, talked about all of these. So now let's talk about WHLR. Okay, so WHLR, and this is kind of thing, the fact that I traded 7 different stocks just sort of shows how scattered attention was today. WHLR starts to squeeze up right here, and I bought this micro pullback at 375. it ends up squeezing up to 420. I just scaled out on the way up, but as it dipped back down here to 390, I added back and it stopped me out. So I didn't go flat on the day, but I recovered to being down only maybe like 300. And then I gave back a little on Zap. But then my final trade, the last trade of the day that I took was, I think one of the last trades was on GameStop. No, actually, I'm sorry. The last trade I took was on Zap. I had ZAPP, and then I had a 500 share position on DRCT, which was a loss. But anyway, and then I was just sitting here basically waiting for GameStop, waiting for the shareholder meeting. And, eventually, now it's 1:30, running out of time. That's not happening. It got postponed. And it's like, well, what else could I trade? REBN, not much liquidity, right? BNED, not much liquidity. You take big size on one of these trying to throw a Hail Mary, and next thing you know, you're going to get stopped out. You're going to take a big loss, and then you're going to be really frustrated. And doing all that to chase a $600 red day, like, who cares? So getting to the point where your red days are small enough that you can walk away and not care is key. That takes away the emotion, because it's the emotion that drives that irrational, inconsistent behavior that causes the big losses. Definitely my biggest trigger today was going from up 1,000 to down 1,500, and then going down 3,000 almost on when I was on Zap. And at that point I was like, ugh, I've gone from green to red. That's a trigger. Should I just walk away right now? And I thought about something Danny said to me recently. He's a student at Warrior Trading, and he said, I'm trying to just get comfortable with being red on the day and just continuing to stay focused and not let it get me rattled. And I sort of thought about that, and I was like, that's a good point. I'm down a couple $1,000. Like, who cares? If there's good setups, trade them. But if there's not good setups, then obviously walk away. Yes, there's a certain point of, if you're down X amount, you're going to become emotionally compromised and more likely to fall into the emotional hijack. But I didn't get to that place today. So that's good. I mean, I had higher emotions, I'll say that, but it wasn't too bad. So let's see. So today's the 13th. So down $685, putting that in my little journal up here. And I'll say today was a higher emotion day. I did start to get a little activated, but went from green 1.3K to red 3K, finished minus 685. So I like to just take a couple of these notes here for myself, just kind of as a reminder. And today is my 5th day in a row of being disciplined after my red day last Thursday. And, as always, I'll be back at it tomorrow. I'll be able to import today's trades tomorrow. So I'll be able to look at where I sit on the week. But it has certainly been a little bit of a slower week for me because, although there's been some opportunities on GameStop, they haven't been that easy for trying to day trade. Other stocks have been choppy. There have been a couple of low price stocks that I didn't trade, Nvidia and Tesla, higher price stocks that I kind of leave alone. So for stocks that are in my wheelhouse, there hasn't been a lot this week. So it's been a little slower, but I think that's because there have been a couple of these other stocks that have been sort of attracting attention, pulling volume away from what I would typically trade to those markets. So the best thing I can do is just be patient and recognize that this isn't a market right now where I'm hitting a lot of home runs. I mean, I still focus on base hits, but sometimes you're going for a base hit and you're just like, wow, everything seems so strong. And that's not the feeling that I have right now. Right now, I'm like, okay, I got to be a little bit careful. I got to take it slow. Let's, stay moderate, not overstay my welcome. And once I went into the red, I was like, oh, you know what? Better reduce that position size. And I did a good job of doing that today. So brought the share, put the share size up pretty quickly when we had a couple of stocks moving and I got into the green. But then when I went red, I was like, gotta bring that share size back down pretty quick. And I was able to recoup some with smaller size. But yeah, I did the best I could today, but it's going to be a red day, a successful red day. And the most important thing is that I will live to trade another day. That's kind of my approach. I want to be here every day. I've been doing this for a long time. I want to keep doing it for a long time. So I never want to empower one trade to potentially blow up my account because it's just not worth it. And that's one of the big reasons that I don't like short selling. Now, I saw some people on social media mentioning yesterday that they were having platform issues. I've had some platform issues too. And when I have a platform issue, let's say I'm in a trade and my platform goes offline and I'm stuck, one thing that I know is that the most I can lose is if the stock, God forbid, goes to zero, which would be crazy, but that would be the most I could lose. The problem with trading on these types of days where you have crazy momentum and really volatile markets is that if you were short a stock like a GameStop, and over the course of 4 hours, it goes from $30 to $40 to $50 to $60 to $70 a share, you could be down millions. It could happen so fast. You can lose so much more than you stand to gain. Now, yes, of course, you could put a stop order, but if the platform goes offline, stop orders don't go through, you're stuck. And this is the really frustrating thing is that they're always going to say, well, sorry, this is the risk you took. You signed the waiver. You're trading online. These are the risks you take. And that just, it's the reality of what we're doing. But for me, I mitigate that risk, I feel, by trading to the long side. So the most I could lose is if it goes to zero. I mitigate that risk by routinely taking money out of my account because day trading is different than, even Roaring Kitty, he's already been holding for weeks, presumably. That's a YOLO trade. He's not day trading, he's swing trading, he's holding it. So for people that are day trading, that are moving in and out of the market quickly, I think it's a good idea to keep your account small, to pay yourself, to take profit out of that account, and just keep using that account as a tool. But no, look, it's possible that at some point, some crazy anomaly could happen. The market, routes go offline, platform crashes, and you could have a big loss. And if worst case scenario, you had to replace that tool of your account, if it's a $5,000 account, $10,000 account, that's doable, right? You replace that tool, you set up a new account, and you move forward, especially if you've already made 50,000, 100,000, 200,000, 300,000 trading. But some of the people that trade, they'll make 500,000, 800,000, a million. They'll take some money out for paying taxes. They'll take a little bit out for paying some bills, and then they'll keep the rest of it in there. And it can grow and grow and grow and grow. But then in one day, because of a lapse of judgment, FOMO, because a cat walks across your keyboard, it doesn't matter what it is, all of a sudden, boom, big mistake. So, that's something that for me, right now, I started the year with $119,000 in my account. My account as of today probably is around $350,000. So up, I've doubled 2x the account already this year. As always, results not typical, but this is me doing this for a long time and I've got a real degree of confidence. I'm not using leverage in my account. So there's no leverage. I'm just trading, the cash amount, which started at 119. It's now up to 350. And I feel like it's kind of time to pull some money out because on a stock like GameStop, I could buy 10,000 shares of it. And, in a second, I could be down 15, 20 grand. And, being up 250,000 or, well, we could see where I'm at on the year. It won't include the last couple of days, but, being up over 200,000 on the year, the thought of losing 20, 30 grand in one day and giving back 10% of my year, that's not such a fun idea. I'd like to try to avoid that. I think a lot about risk, and I think that that's the right way to think about trading, but I understand that some people might think that I'm holding myself back by being so risk focused that I could, do a lot better if I just YOLO a little bit more. And, I've made so much money, I could afford to YOLO. And while I won't disagree with you on that, I also feel that's incredibly important for me to continue to be really consistent. And, my track record is what I have, being a consistent trader. I'm not a YOLO trader. That's not what I'm known for. I'm known for being the guy that's here in the trenches every single day, knocking out $2,300 a day this year, right? Not huge numbers. When we go back, bigger time frame, I'm at $5,700 a day over the last 8 years. So this year so far has been a little below average, but there'll be years that are a little above average and, a little below it. It all averages out. At the end of the day, as long as I'm consistent, as long as I'm making money, that's $11.2 million of net profit, gross profit. Let's see, we must be getting up close to 13. Yeah, 12.7 million. So maybe I'll cross over 13 million in gross profit this year. That'd be pretty cool. But, again, it doesn't really matter. It's not going to change my life if I do. It's not going to change it if I don't. So I just keep showing up every single day, chipping away. And for me, I'm just I'm very risk focused. I think another aspect of that is the fact that I'm at a point in my career where I feel like I've been doing this for so long. I have so much invested in this. And I think sometimes traders who are newer, it's easier to YOLO because it's like, if it doesn't work out, I'll just do something different. But after you've been doing the same thing for 10 years, 15 years, you've got a lot of time into it. The thought of just like switching and being like, oh, I mean, it's one thing to make a choice to be like, okay, I want to stop day trading and, whatever. It's another to get forced out because you make a mistake, right? You blow up your account. And while on the one hand, I'm somewhat envious of the people that have the risk tolerance to let it roll on, something crazy like a GameStop out of the money call. Could I have put $10 million on that at one point? Sure. But I would have had to be prepared to lose it. And I can't handle that. So at the end of the day, it's you that you have to sit with, right? Can you accept the risk you're taking? So manage your risk, keep it tight. Thank you for tuning in. And hey, if you want to check out 2-week trial warrior trading, I'll put a link down in the description, pinned to the top of the comments. And I'll encourage you guys, as always, to hit that thumbs up, subscribe to the channel, and to take it slow. Practice in a simulator before you put real money on the line. And I'll see you guys, Warrior Pro members. I will be streaming bright and early tomorrow morning for you guys, as always. Those of you guys on YouTube, I'll see you for the next upload real soon. Thanks for tuning in. See you soon.